Hey traders, hopefully you're having a good Friday and a good end to the work week here. We got a video for you mainly because the more traditional markets, looking at the S&P, looking at the US dollar index, did have a very significant volatile move that we will check out within this video. The main contributor for this is the Fed. Jerome Powell said today that the central bank was considering tapering its purchase of treasuries and mortgage securities. So, in short, if you do see interest rates increasing, if you see talks from the central banks really trying to reduce the amount of overall stimulus that they're injecting within the economy, that is overall bearish for the stock market here in the traditional assets. We want to see that funny money coming in when the markets are moving up and when there's discussion of hawkishness or interest rate increases or reduction of the stimulus injecting into, I guess you could say, assets that are in need of it. You do see quite a bit of a sell-off here. So in short, if you don't understand, interest rates increasing, that would be a reduction in stimulus. If they're taking away capital that they would normally allocate to distressed assets, that would also be hawkish or bearish for the stock market. If they're injecting more capital into the economy, if they're printing more money, if the stimulus is increasing, that's overall inflation scares, and that is probably pretty good for a lot of risk-on assets, including cryptocurrency. So that's kind of how I'm viewing what the Federal Reserve is doing in relation to how I'm acting within the markets. So as we just discussed, the Fed is considering tapering its purchases of treasuries and mortgage securities, which would be hawkish. It is bearish for traditional risk-on assets like the S&P, and we see that reflect quite aggressively within the price action. This is the daily chart. So this big red candle indicates today's day of trading, which was a pretty big move to the downside. So we opened at around 42.27, and then we closed at 1.75% down, which is a pretty aggressive move in a single day for the S&P. We do have a major level of support. If we're taking it all the way, for example, to the weekly chart, we see massive candles to the downside indicating buy pressure, picking it up and bringing it above the 41.50 range, which is our current major level of support. Not a tremendous amount of buy pressure on the way yet, but we don't see a shit ton or a lot of sell pressure as of yet. This weekly candle's, I guess, done. Yeah, so not a tremendous amount of volume for the amount of movement that we've had to the downside, in my personal opinion. We do see a very strong level of resistance where we see the weekly candle close pretty well perfectly aligned with the top of our first double top here, which is around 42.47. Well, that's going to be the next major level that we do need to see break in order for us to get a little bit more confidence for the overall risk on sentiment that we anticipate will continue for the rest of this year. When we are looking at a smaller time frame, let's say the 12-hour, we have been talking about this major ascending wedge and how if it does break to the downside, we could see quite a bit of sell pressure come in, where the bears are going to be taking in control for a little while. And we exactly see that right here. If we are looking at a potential area where we are looking for like a bottom or where there could be some buy pressure, we obviously have this major zone here. And we also see it is in confluence where we have our targets for this ascending wedge. So I do expect a lot of buy pressure to be around 41.20. Somewhere around there is going to be a good zone for us to look at a potential level of support. Now, we already did discuss the situation in where if this ascending wedge does break to the downside, what we will be looking for. And what we are going to be looking for, since it's actually already occurred, is a nice descending zone. We've already seen one high and a lower high, and we can connect that with a unvalidated descending resistance zone. And what we're going to be looking for is a nice bottoming formation. It can be quite small on a smaller time frame, but I do expect this zone to hold. This is just kind of like a little bit of FUD overall for the interest rate increases. I don't think they're going to be increasing the interest rates just yet, because there still is a lot of zombie companies that do require that very low interest rate in order for them to sustain their business, and a lot of business models are reliant on very, very low interest rates. And I think the overall kind of talking heads at the Fed understand that well enough that they will not increase interest rates until they have close to some major economic worries. And that would be inflation, runaway inflation with the velocity of the currency increasing. We don't really see any of that, so I think that the central banks will push the envelope as far as they possibly can and just basically continue the stimulus until it's a little bit too late. Until that, I think the overall risk on sentiment, or the inflation trade that we call it, is going to be still along for us. So let's jump into a smaller time frame, looking at something like the 2 hour. Huge push to the downside. This is where we had that discussion where the Fed was talking about easing the purchasing of treasuries and mortgage securities. So not great to see. We do see a potential bottom right here if it does pick up on the Monday this upcoming week. Like if we see a big spike and then a kind of rally for that to consider to be a bottom, where we see massive kind of puking of volatility. This is a capitulation phase that we always talk about, where you see massive R-vol compared to the recent trading range. Good to see for a move to the downside, but I'd like to still see that consolidation form and the continuation to the upside, because then that, for me, would indicate that we could see a potential bottoming here. Definitely unvalidated as of yet. We also have an opportunity to potentially form an expansionary phase or an expansion wedge. And this is very similar to what we saw a little bit while ago. So if we go to a smaller time frame, just remember we had that nice grinding move to the upside, some pretty bearish action, some pretty aggressive action, and then we saw an expansion formation, and once that expansion completed, we saw quite a bit of a rally to the upside. So understanding what happened in here, we could see a little bit of a fractal formation similar to what we saw here. Massive pushes to the downside. We see an expansion in the volatility, and once you see a break, you start to see that rally continue on. I think we could see something like a very small formation of what we see right here. So let's just quickly go into our this guy right here, bars pattern, and then we can just take a look at this zone, and then just look. Obviously, it's not going to be exactly the same. It has to be a lot smaller. No two charts are going to be exactly the same, but we could see something where we're going to get a little bit of volatility. Oops. We're going to get some expansion and volatility. We want to see that bottom form and then that break to the upside. So this isn't absolutely perfect, but that's kind of what we're going to be looking here for on the S&P. We see lots of support around that 4130, 3140 range. So definitely unvalidated as of now, but that's going to be the continuation pattern that we're looking for setting up the S&P for the next move up, or at least to hold this support while we're consolidating. Now to the next chart is going to be taking a look at the DXY. Just want to talk about the volatility not really moving too much to the upside, which is a good thing for us because we don't want to see massive exploding volatility within the S&P. That's causing a lot of fear, uncertainty, because that's not going to be positively impacting the crypto market. So the DXY, which is the dollar currency index, very, very aggressively pushed to the upside. A little bit worrying because we had an expansion phase here. This is the continuation pattern. We were talking about it potentially breaking here. And since the Fed has been talking about not even increasing interest rates, but just easing the amount of stimulus that they're currently injecting within the economy, we see the US dollar absolutely spike. Now, at this point, this is a little bit worrying because we do see a nice double bottom on a major level of support at around the 88, 89 range, or I would say 89 range is the main zone here. And that's a little bit worrying because if we do complete that double top, or the double bottom, as you can see, major level of support when we are zooming back to a very large time frame. We've been talking about this potentially being a series of lower highs where we're going to get some contraction pressing up against this key level of support at around 89.5, 89.3, somewhere around there. So we don't see that invalidated yet, but this very aggressive bullish move is a little bit worrying because we do see a potential double bottom, as we can see pretty easily within the price action here. So what we're going to be looking for at this point in order for us to continue the risk on sentiment, let's get our draw here. This is a major high. This is a lower high from the previous major high. What we're looking for is a continuation of the lower highs from the previous high. So what we don't want is to see this double bottom actually follow through, where we're seeing a break in a higher high than this high here. We want to see the price hold below this high, so we don't really want to see it start trading above the 93 range. If it does, Pretty worrying, to be completely honest, because if it does follow this double bottom, not great to see. We want to see a breakdown. In order for us to see a breakdown, we do need to see that nice descending zone. We're getting a slight contraction with a series of lower highs, holding a major level of support. This is a little bit more bearish because we see the highs getting pressed down more and more and more. And if we do a volume by profile, ideally you want to see a lot of the trading volume kind of in the lower half here, because it's trying to press each time. Whereas if you see a little bit higher, you see more buyers come in when it starts to really push up and get that momentum. So ideally we do want to see this high not go above this previous high. That's like the main thing that we want to anticipate in order for us to continue our overall view of the market, as risk on sentiment should be continuing for the rest of 2021. If it doesn't, S&P is going to fall further, maybe breaking that key level of support that we talked about. BTC would be in quite a spicy spot, which we'll talk about a little bit later in this video. But the main takeaways for this particular video we want to talk about is the S&P reacting negatively to the Fed talking about tapering its purchases on Treasury and mortgage securities, basically creating a less risk on environment where they're taking away some of the stimulus, and there is talk kind of in the background of raising interest rates where central banks are getting a little bit more hawkish. If you don't know, dovish is raising overall stimulus, printing lots of money, doves fly up, hawks go down to get their meals. That's kind of the way, kind of how bulls and bears are in that way. So that's going to be my overall viewpoint. Definitely keep an eye out on what the central banks are doing, because they will heavily impact the more traditional markets. Bitcoin has held quite well during this very turbulent time, but overall, they are going to be pretty positively correlated if you're looking at it from a broader perspective. So it doesn't look fantastic for Bitcoin, to be completely honest. I'm just going to keep this on here. This is the futures, so we will be trading on Sunday night, which is great. Having a good understanding of how the interaction is within this major level of support right here, kind of breaking below the 4140, so 4130, 4140 area there. So we'll definitely be taking a quick look on the Sunday for that. Now moving on to the asset of the hour. Going to be looking just primarily at Bitcoin, because Bitcoin is your primary driver when we're talking about the cryptocurrency market. If Bitcoin falls, basically all other cryptocurrencies are going to be falling. Like we saw in late 2020, early in the bull run, we usually get BTC to move to the upside first. It's going to be the initiator of the overall sector, and then we see alts rally afterwards, which means that the Bitcoin dominance chart should be climbing and crawling back and getting back a little bit of its dominance while we're in this consolidation period, which it is, and that's fantastic. Overall, market movement is kind of going our way in terms of how we view the market. So not really going to dive too much deeper. We already know that this major level of support between 30 and 32K is an extremely key, important level that we have to consider. We did break out of our failed symmetrical triangle, and then it had a failed symmetrical triangle again, creating a fractal pattern of the larger pattern, which we talked about in a previous video. After that break, in my opinion, that was a very bullish indication. It was a huge burst of confidence from the buyers to have a fractal kind of back to back and then push above this major descending zone. So overall, it did look very bullish. We were expecting some hesitancy around the 40K zone, which we did get. We've been falling a little bit more, but I think this is due to the overall central bank kind of sentiment that they've been giving in terms of the easing of purchases of treasury bonds and mortgage securities. I was going to say mortgage back, but mortgage securities. So this is kind of the last stand for the buyers. If we're taking a look at, let's say, like the weekly chart, we see massive wicks to the downside, kind of holding off the 34K zone. So we see from 34 all the way to 30K, this is a major zone of support. I don't mind if there's a wick left there, but if we do start to trade below the 30K zone, the head and shoulders is still a possibility that we have to consider. I think a lot of people were kind of going back and forth within this area, which definitely makes sense. It was a pretty challenging time as a technical trader and technical analyst, but if we are looking at a larger time frame, we do see that major higher low still hold really well. So I'm still confident. I think there's a little bit of worry because the overall market's a little bit more fearful, uncertain, but when we're just talking about Bitcoin, I don't mind it taking a little bit of a pullback. Let's go to a smaller time frame. This still is a major level of support because let's say if we quickly get our snip and discuss this for a quick second here, let's get our snip. There we go. We see a lot of confluence within this, let's say 35, 34K. We see our initial zone of confluence right here, where this is a descending zone from previous key level of resistance. That's going to be turning into a strong level of support, as well as our ascending level of support, which we talked about, which held here, here, here. On a large time frame, this whole zone here is just a wick. So you see lots of buy pressure picking it right back up. So it does look pretty solid around that 34K zone for a key level of support. And we got this zone right here. We got this zone right here. And then you have the overall kind of larger perspective zone where this is going to be the buy zone right here. So I don't mind that it's going to have a nice pullback, which is not aggressive, not a extremely quick move to the downside. You see a very strong push up where there's a lot more buy pressure than there is sell pressure within our average BTC volume indicator right here. Not just one exchange. This isn't just looking at Binance. This is looking at all the major retail exchanges, adding them all up and then dividing them by how many exchanges there are, giving you an average of the volume across all the different retail exchanges, not just a single one. So it gives you a lot more information that you can work with so that you can actually conduct some solid VSA, some volume spread analysis. So when we're looking at the volume, we see a lot more buy pressure than we do sell pressure. Even when we're seeing our pullback to take us back to where we saw our initial push up, we see a lot less sell pressure than we see buy pressure. So volume accumulation is still currently present in my view, which is fantastic. It does correlate well with our technical viewpoint where we see a strong push. This is a pullback validating a major zone of confluence, and I think it's setting up well for our potential next leg up, which is kind of right here, and you see a massive level of support. So you see a lot of contraction and volatility. I'm really happy that you see this nice descending zone right here. That's going to be our confirmation when it inevitably breaks that, and you see lots of support right here. You see contraction, contraction, and then I think you're going to see a impulsive push after we break this contraction zone. So we could see a potential fall one more time, making a higher low, because this is our cap. You see a nice bottoming formation. This is our higher low. We could see another potential higher low from that low. I really want this to be the low that's going to be higher from this low. So you see this low, and then you see this low. So you kind of see a nice bottoming formation, and then we could see a nice push, a nice setup. That's supposed to be an ascending zone, a nice setup, and then a break of that 40K zone. And once that break of 40K happens, I think we will start to see some momentum to the upside. And for a little quick update, if you haven't seen the videos for a little while, when we are breaking to the upside, let's go back a couple time frames. We are looking for a little bit of hesitancy to form our larger triangle formation. Let's just take the picture one more time. Let's just refine the volume so it's actually usable. There we go. And we see some nice buy pressure along the bottom here, like we've talked about. And our expectation is we're going to be forming some form of squeeze, contraction, and volatility, where this is the bottom. You're going to get one more push up. Maybe you're going to retest this 40K zone as a new level of support. Once we break it, that would be absolutely beautiful. It would pretty well be perfect in terms of a formation. We're looking for, let's say, a push up and then a slight consolidation, and you see one, you see two. We need one more validation, and then you see that squeeze really start to confirm, and then you're going to get that next break to the upside, in my personal opinion. So we've been really calling this since, I guess, the ascending wedge break right here, because we were potentially looking at this melting to the upside if it was going to, and a little bit of hesitancy to really start looking long once we started breaking this zone right here, and then we got that major jump to the downside. But overall, I do still think that we're on track. We really haven't changed our overall bias. It's looking phenomenal. We wanted a consolidation. We've made a lot of money from October up until kind of late spring. You know, be appreciative, be thankful. Some of the meme coins were just unbelievable in terms of the ROI. You put $100 in and you get like 10 grand back, or 20, 30 grand back. Multiply $100 by 1,000. If you put 1,000 in, you get the gist. There's been some unbelievable profits to be had. So I think this next stage, because this would be part one, and I think then part two will have an even greater altcoin run, which is very exciting. Loading up on alts right now, staking them, yield farming them, so you're able to make more with the money that you're currently already invested in the crypto market. So definitely keep an eye out on that a little bit later in the year. But as of right now, things are, I guess you could say, according to plan, as much you can plan in terms of a technical analyst, but it's looking pretty phenomenal. We do have to really be sure that we're not going to be breaking this down, and we're not going to be looking for that head and shoulders completion. That would not be a good situation to be in. We're really looking to have that 30 to 30K 32 to 30K zone, which is right here, be the major level of buy pressure where there's going to be bulls holding this zone. So that's our overall objective, is to understand the market, basically just take actions in a way that suits the overall market. And as of right now, it still looks bullish. Looking at a smaller time frame, you see volume accumulation, not distribution. So from a technical, from a volume standpoint, for volume profile, as well as just looking at the volume here, looking at time-based and price-based, it's looking pretty phenomenal. So thank you very much for tuning in. Not going to go too much in greater detail. We've definitely done well so far. So let's finish off this bull run strong throughout the end of this year. If you do have any questions, please drop them in the comment section below. We do appreciate genuine comments. I know there's a lot of like spam and scammers and people that are just not quality comments. I just could say bad actors. Ignore those. If it's too good to be true, it probably is. I wish everyone safety and profitability during this uncertain time. So thank you very much for tuning in. If you enjoyed it, please give us a thumbs up, because we know to make more videos like this, and we always appreciate subscriptions because we do put time and effort into presenting this information for free in a very organized manner. So thank you very much for tuning in, and until next time, have a good one and have a great weekend.